Portfolio Builder members, today is May 15th and we have a new trade alert. We generated a $1,802 profit from Monday through today, so that was about a 48-hour hold. And we did it by selling covered calls against the world's #1 security, the SPY ETF. This is very easy to do. We do it every Monday, Wednesday, Friday at noon Eastern, and it takes about 2 minutes to do this strategy. So if we look at the return on Monday, we were sitting on a $31,727 profit. And again, that was after we covered our covered call. And today, after covering Monday's trade, we're up to $33,529. Now I do want to note, if you do click on the link to view our track record, that will be after I've issued a new covered call. So let's take a look at today's trade alert and how to get it all filled out. So if you're new to the program, your first step is to purchase 100 shares of the SPY, but you only want to do that during a trade alert because we are constantly protecting our capital, typically with an in-the-money covered call. This means that we can actually get paid to insure our assets and still generate a profit. So we'll look at that in a minute. For those of you who are following the program, and you're in this 277 strike, we had a great day. The market jumped higher. We will never ever lose if the market goes higher. So this is great for the person who bought the call option. They made a good return. And for us, we had our baked into the cake maximum profit today. So we will buy to close the 277 strike for a debit of $7.13. which you can see I have put in my spreadsheet right here, for about a negative 26% return on the covered call. That means the guy who bought it made about a 26% gain. Good for him. Doesn't matter for us because our SPY shares have gone up in value far greater than the covered call lost value, and that's why we had this huge profit jump, which was much larger than we're used to making in this strategy. In fact, we're making about 4 times the normal return right now, because of the elevated levels of volatility in the stock market right now. So the higher the VIX goes, the more money we make from this strategy. So today's new trade alert is another in-the-money covered call. I'll explain what that means to everybody so that this doesn't scare anyone. Right now, when we wrote this covered call, you can see the last trading price was at $283.99. Let's just say $4 to make life easy. Okay, so if we were to look at what we're agreeing to, this would say we will sell our shares for $280. That's a $4 loss right off the bat. So why would we do that? Because the stock speculator says, okay, I'll pay $467 to borrow your shares from now till Friday. And basically, if the stock market goes a lot higher, he's going to generate a profit. He's going to exercise his right to buy our shares for $280. And we get to keep the $467. And so the difference there is $67. Now, $67 may not seem like a lot of money, but if we can do this 3 times a week, which we can because the SPY ETF has expirations every Monday, Wednesday, Friday. Well, let's add it up. If I make $67 3 times a week, 52 weeks a year, that's $10,452 of income just from writing an in-the-money covered call. And what's beautiful about the in-the-money covered call is the SPY can now drop $4.67 and I won't lose a penny. In fact, I'll still make that same profit. So it's a very smart trade. And if I scroll a little bit lower, you can start to understand why we picked the 280 strike. So first of all, there's obviously a big risk in the market that the trade war will escalate. And the more I research this, the less likely I think it is going to be a positive outcome that we do reach a trade deal. So for the next several months, expect to be doing a lot of in-the-money covered calls. This puts us in a situation where the market can trade lower and we make our same boring return. So if we invest around 30 grand to buy 100 shares of the SPY ETF, and then we can pull out $10,000 of income from an in-the-money covered call and protect our assets. That's a 33% annualized return. Okay, so that is very hard to beat. in a risk-free way to protect your capital every 48 hours against downturn. Now, if we look at this, there are 52,000 contracts open right now to purchase the SPY at 280. That's about $1 billion worth of capital that is on the line to purchase the SPY if we hit this 280 level. So that's a big support level and why we chose that. And we're going to see the similar setup in the options expiring this Friday. So that's just for today that exists. For Friday, there's a very similar one with even almost 3 times the amount of open interest. You can see there is 124,000 contracts to buy the SPY at 280. So you multiply that by 100, then multiply it by 284. And you can see Wall Street has a huge support line right at 280. So this is a great trade. It's a great profit and it has a lot of protection. Now, for every 100 shares of the SPY, we're also recommending that you buy the long put option. So when we write options, we call it short. That means we're willing to either sell 100 shares if you've written a call option or buy 100 shares if you've written a put. Now, our product does not like to write puts. And in our webinars, I teach investors why that's such a more difficult and risky scenario. We prefer to buy the asset and then loan out our shares as if we're an investment bank to gamblers. And these gamblers are willing to pay us a huge premium to borrow our shares of the SPY ETF for these tiny 48-hour periods. So it makes for a great strategy to generate income, to generate a return, and to not have to worry if the market's going to go higher or not. If the market goes lower, it's actually better for us. That means volatility goes up. That means call options cost more. And that means we make a huge return while having an in-the-money covered call that protects our assets. Now, when we go long a put option, it's the opposite. And this is actually a very leveraged, risky trade that only represents 1% of our portfolio. And it's the buy to open July 19, 2019, 264 put. And right now, this will cost less than $3.21, most likely. Whatever the cost is, you want to have this as your backup plan in case the market goes into a free fall. This little trade can double or triple our total return in the portfolio in a matter of weeks if things escalate. And in the worst case scenario, we may lose half of its value, the trade war is ended, and we just exit this position. So we're risking about 0.5% of our total portfolio to have this. But if something really does escalate, this thing can really make a lot of money. I'm talking about going from $3 up towards $12 to $15. So let's just recap. From Monday through Friday, from Monday through Wednesday, we generated a $1,802 profit. We've been making a similar profit every 48-hour period, including over the weekends from Friday to Monday. We've been doing this slowly and surely, the turtle strategy. We've done it with a lot of protection to the downside. And if you're the type of investor who hates losing money, but you don't mind making small amounts of capital over and over and over again, this is perfect for you. Now, when you do upgrade from a free trial to a paid membership, which in every email, there's a phone number up top to your personal coach, you're going to get a copy of this spreadsheet. Now, you don't need it. I make this so easy to follow that you don't need it. But here's how you would input this trade today into the platform. So we're bringing in a credit of $7,939. Of course, we're not going to keep all of that. We're looking to keep about $67 of that because that was the difference in the spread. So we're aiming to make around a $1,139 profit net after we've covered the position this Friday. And so please do note, every time I issue the new covered call, our return on investment will jump up a little bit until I have covered the position. So every time I report our earnings to our subscriber base, it's after I've covered the position and before I've written the new covered call. Now, there is a good bonus that is involved with folks who do upgrade from the free trial to the paid. First of all, you get the spreadsheet. That's great. But you're also going to get a 30-day free trial to our diamond level membership. If you look at what's under the hood of the SPY ETF, you would actually be purchasing these stocks right here. And when we purchase these stocks directly, we can actually get a much higher covered call return in terms of the yield. And we can also aim our strike price at each security depending on where Wall Street is telling us to put our bets. And so this portfolio has performed at twice the rate. It only trades on Tuesdays, so it only trades once a week. It does require more capital. This one requires $150,000 to replicate our model portfolio, but essentially it is the same thing as the SPY. It's just the top positions of the SPY. So we've concentrated your ownership into the leaders of the SPY ETF. And by doing so, not only do these stocks outperform the SPY, they have a few advantages. Number one, the bulk of the capital flowing into the SPY is automatically flowing right into these companies. Number two, these are the most profitable companies in the world, so they have the most capital for stock buybacks. Number three, these companies also have the best credit rating, so they can borrow money at the cheapest rate to once again support their stock. So these companies really make this strategy amplified, and you can see it in the results. Doing the same thing with a defensive in the money covered call every Tuesday, this portfolio has twice the return. And for the uber wealthy, we do have a third product, which you get a bonus 30-day trial to, called the Whale Club. This one's primarily trading the bond market through the TLT ETF, while bonds pay a boring 2.5%, which barely covers inflation. If we simply buy the TLT, which gives you exposure to the bond market, we can then go write the covered call and make a very boring but safe return. Currently, since launching, this is up 7.7%, rather 7.17%, and it's done it completely from trading the TLT. You can see the trades right here. Very boring, very predictable, following the money. Wherever Wall Street's putting their money, that's where we're putting ours. And this is ideal for investors with over $1 million. Now, do note it does have the capacity to rotate into a stock portfolio, but it would only do so when the coast was super clear. And one difference between our Diamond program and our Whale Club is that we did include Amazon and Google in this portfolio. Those stocks can cost around $180,000 and $110,000 to accumulate 100 shares, which is what it requires to be able to protect your capital with covered calls. So this is a bigger money portfolio. It's much more conservative. It's much more concerned about having low volatility and not so concerned about beating the returns of the Diamond or Basic program. Now, for those of you watching this video but you can't find your email, it's probably because you have not yet confirmed your subscription. You do have to go find this. Please confirm your subscription email. You have to click it and you have to say, yes, subscribe me to the list. So this may be located in your spam folder. So that's a place to look for it. But if you just go for there and search for Portfolio Builder, you should be able to find our email and opt in. Finally, in the email, we also have the option to subscribe to our intraday alerts. This is where you'll get all the content a little bit faster than email delivery and get to see what we're looking at overnight, in the morning, and in between the day. So what I'll do in this video to close this out here is just look at a quick review of the most recent content we've collected and shared with our Telegram group chat. So I'll go backwards in time. So first of all, we have the last two trades, which were first posted here. So if you do want to get them a little bit quicker, that's where you can grab that. The option volume, which we reviewed earlier in the video. Here's some tweets that are interesting. The market's jumping higher on news that they've delayed the tariffs on auto imports from Europe. And the Chinese continue to say that they're going to fight back and just sit on this forever, while the U.S. says things are progressing. So clearly there seems to be some trouble ahead. We've got the old CEO of Goldman Sachs saying that China's going to have to cave into this in time if we stick with it, but it may cause some pain, which is what I'm expecting. This was the future market reacting overnight. The bond market with the TLT is just on a tear, and I believe this trend will continue until the stocks do take a major hit. At that point, I think we'll see another flood into the TLT and then perhaps a reversal as people start to realize America has too much debt. Some stats coming out about our debt continuing to rise. Tencent is a very pivotal company of the Chinese economy, so something I'm looking at to see weakness. Their results came in a little bit weaker. They're expecting a 30% here on the income, but it was a little bit less, but still growing. Now we have a lot of pressure for the Fed to lower rates, especially with the uncertainty in markets. So that's looking more and more likely to occur, which will be great for our TLT and also great for our stocks. So this is good news all around. The bad news is that the tariffs will most likely cause a stock market crash and then force the rates to rise as investors realize we can't pay this huge debt we've accumulated. But yeah, it seems like there's a pause for a couple weeks until we see if China and America can make some progress. But the more we look into it, the less likely this seems to be the case. In this update, now their telecommunication companies are being banned, and so this drama continues with a fight over this 5G network. Apple is a big target to watch out for in this trade war as their production lines are located in China. They've also had to drop prices in China and India to try to compete. And this is a global phenomenon that the birth rates are falling around the world, which is creating a demographic nightmare where we have a lot of people going into retirement, but not enough young people coming in to take care of them and create the tax revenues to support these people. And so, of course, the Chinese don't want to stop stealing, and I think they're going to have to see some serious pain before they're going to make any amendments to their law. There's a threat that they may sell their $1.1 trillion of U.S. holdings, but the problem is they need dollars to purchase oil, so it's probably going to be a nuclear option if they do start to sell their treasuries. Chinese Foreign Ministry is acting tough, saying they're not going to respond to tariff threats. We can look at the Shanghai over the past month has dropped from around 3,300 all the way down to 2,900 for a 10% loss. And meanwhile, the conversion rate from the US dollar into the Chinese currency is continuing to devalue. So this has pushed a lot of capital from Chinese uber wealth into Bitcoin, which is at 2019 highs. We have an interview here with Steve Bannon as well, indicating how problematic it will be for this trade tension to end. And really, it's a change of government that we're asking. So this may be very hard to achieve. And the big data out overnight was that the Chinese retail sales are cratering and back down towards growth levels last seen almost 2 decades ago. So the pressure is definitely mounting, which brings us back to why this trade is so beautiful. We are protected for $4.67 of downturn in the SPY ETF from now to Friday. If the SPY does drop tomorrow, we simply buy back our covered call for a huge profit and move the strike lower. It is extremely hard for us to lose capital with this strategy. And meanwhile, if we're wrong and the market goes flat, up, or just a little bit down, less than $4.67, we make that same boring $67 profit per contract, which, if you do that 3 times a week, 52 weeks a year, is a 33% annualized return or $10,000 a year of income. This is without any compounding. This is just pulling the profits right off the top, putting them straight into your bank account. Now, if we have double paydays where we're able to sell our covered call and then buy it back the next day on a Tuesday or Thursday, this compounds to even twice the rate almost. So instead of collecting 3 checks a week, we can collect up to 5 checks a week if the market is heading down. So we actually love downturns in the market when we're writing covered calls because we can protect our asset. The rent goes up, 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 the higher the VIX goes, and this strategy gets better and better. So there you have it. We do have a live webinar tomorrow. We'll be covering our strategies, all of our portfolios, and answering a detailed Q&A for how to follow the program. So thanks for your time, and look for a new update tomorrow. If there is a pullback, look for an emergency alert, which we'll send out via text and email, saying to simply buy back the covered call for a profit. And then we'll look at where the new support line has developed in the option market. We'll simply push the strike a little bit lower and add more protection to our portfolio. So thanks again for your time. Looking forward to delivering a new alert and webinar to you tomorrow and Friday.